GM, welcome to Weekly Markets. This is a weekly series where I analyze the high time frame view of the markets, taking a look at the previous week as well as the week ahead, diving into positioning, catalysts and risks, as well as a trade of the week. So, let's dive into it, starting with the high time frame analysis of the markets. What have we seen on Bitcoin? Well, this cycle, Bitcoin has formed clear support resistance levels on the high time frame. You had a level at 25k that held on the retest multiple times, led to the move higher. You then had the flip of this 49k, we can call it 50k, because you'll see the theme on Bitcoin. You got 25k, 50k, you got 75k. I know it's 73.8, but you get the point. Bitcoin tends to form these high time frame support resistance levels around these round numbers. And again, you saw it get retested, respected, and led to another move higher. Now, currently, we're at that pivot level, which is 110k, let's call it, where Bitcoin needs to retest it and now push higher. Because as soon as it stops doing that, we're seeing something different this cycle, and that denotes a trend shift. You expect trends to continue until they show a sign of weakness. And at the moment, we have wicked into this level. We briefly closed below but got back above, and overall this could all end up being a support resistance retest, and you could see something like this where we now go off, and yes, it gets a bit choppy, but overall we hold this level. That is definitely a valid path that we can see in the coming weeks. However, given the latest weakness, I also want to dive into some other paths which we could potentially see. But I want to be very clear that around these support resistance levels on the high time frame, as long as we're above it, Bitcoin is still bullish. Now, there's still work to do from here. We have to reclaim this high over here before I would say, okay, it's time to actually start looking for longs, because the low time frame is starting to look bearish. So on the weekly, we're bullish, but as I go into the daily time frame later on, you'll start to see that we're seeing early signs of a potential trend shift. So on the weekly, what you want to see for bulls to regain momentum is for price to get above this 117.9k level, this high over here. Because reclaiming this level would almost, to a high degree of probability at least, confirm that we're going to go for the highs at least, if not new highs, because this is now a structure level that's formed here where if we start closing above it, then you actually have higher lows forming here on Bitcoin. You set a low, you then set a higher low, and if we now reclaim this high, that denotes an internal uptrend and would be bullish structure within this overall range, which should lead it to at least the highs, if not potentially break out. So that's the level to reclaim on the weekly chart now. You want to see Bitcoin get above this high, then it's game on to see whether this all-time high liquidity holds as resistance or if we can push on higher going into Q4 and those typical bullish months. Because if you look at all of these support resistance retests, what did we see? Well, on the retest here, led to a move which went 96%. On the retest here, led to a move which went 120%. On the retest here, led to a move which went 67%. So in theory, if we can close above that high, you could see a nice move here, whether it's into the 130s or 140s. Sure, can see diminishing returns, but it would still offer a great final leg, if that is going to be the final leg, in this trend on Bitcoin. So definitely on the cards. That's what I'm looking for on the weekly time frame. Reclaim that high, and we can look for a move to the all-time high, if not price discovery and a breakout. But if we start to lose this high, then you're seeing a trend shift and something we haven't seen all cycle, which urges extreme caution, as you can then actually see this roll over and go for a deeper dip in the coming weeks. But I'll be diving into all of that, breaking it down in catalysts and risks. So purely looking at the charts, if we take some EMA bands, what you can see is Bitcoin is at, again, the last point of support, even when it comes to your EMA band trend support. These are the 12 and 21 EMA bands, which held as support in June, led to new high. Therefore, you want to see that continue. You want to see this band hold, which aligns with this support resistance level here, whereby Bitcoin reclaims this high and can push onwards in a new leg higher. Because if we can't hold these bands, if we close below the 21 EMA, like we did over here, what does that lead to? Well, you close below it here, sure, you get a bounce, but that is just a lower high bounce, then leads to a test of the 50-week EMA, your bull market trend support. And you see it time and time again. Close below, you have to test the 50-week EMA. Close below, you have to test the 50-week EMA. Therefore, I'd expect that pattern to continue. If we close below these weekly bands, which would be also a close below this level over here, that can set up a move to the 50-week EMA, where you can actually see some really nice setups around it. If we sweep this summer low over here, get below the 50-week EMA and reclaim it, well, that sets up great longs for a bounce higher. But there's levels in between that, so we won't dive into that setup yet. Make sure you check out the morning market videos. I'll keep you updated in the latest moves in the market. But for now, in weekly markets, we'll play the markets as they are today, looking strictly at the week ahead. So zooming into the daily time frame, what do we have? Well, we have the September low over here. We have the July low over here. And of course, the summer low. Now, you guys will know from my previous video, in all the bull market years, the summer low never gets tested. You see it here. It was at 49K, August 2024, never got tested. You can see over here, August 2023, never got tested. Now this year was a bear market, 2022, so ignore that. You have 2021. So you see the low put in on June, leads to a lovely rally to all-time high, leads to the biggest alt season in crypto history. Of course, it gets tested later on in the bear market, but the point is the summer low holds until the bear market. And even if you go as far back as 2020, take a look at where was the summer low. June started here, and the summer low was in at 8.8K, never got tested. So you can see this clear pattern where the summer low does not get tested in the bull market year until the bear market begins. Therefore, that is the ultimate invalidation for short-term trades. And as I said, 50-week EMA, that's going to be creeping above this summer low as we get the close in a few hours' time. And in the coming weeks, that's going to move higher and higher and higher. Therefore, perhaps later on in the coming weeks, maybe not this weekly outlook, maybe in next week's outlook, we can see a potential setup around the 50-week EMA. But first of all, we have some levels in between. So you've got the summer low and July low clustering together in a very tight space where I'll be looking for any sweep and reaction off of either of these liquidity levels to look for potential longs. Again, you just want to look for your reversal setups then. Look for your sweeps, look for your failure to returns, look for your confirmation to then get long and potentially play a move upwards towards the upper end of this range, because for all the bearish sentiment, for all of the, oh my God, is it over? Bitcoin started September here, and it is so far green. That may change. We have a couple days left to go, but we had a move up in September and we had a move down. That's it. That is otherwise known as mean reversion. So if you get a range out of September, and if we remove these levels for a second so that you guys can see it easier, what you can see is Bitcoin is potentially just in a range here. This is the most bullish case, of course, where we're now testing range low. And as I said, we do have a potential to form a higher low here and actually just move up, even if it's just to the 0.25 before we go lower. And that can set a lower high bounce there and continue the distribution. So I'm not saying we have to just go down only to that liquidity levels this week. That might not even come. Definitely, this chart looks very ugly with this big red candle on Thursday. And when the charts look super ugly, everyone sees the same chart. So everyone gets super bearish, which can lead to a squeeze beforehand to wipe out all the shorts, wipe out that easy liquidity, which then can simply just be a lower high bounce, which eventually leads to that liquidity target. So by no means am I saying we're going to go straight down from here. There is a scenario where we could build that higher low, could play a bounce. But for me, what really becomes interesting on Bitcoin to invalidate the idea of it just being a lower high bounce is, again, close above this high on the weekly. Then now we can actually say this is a higher low forming and not just a bounce ready for further downtrending continuation. So that's what I'm looking at in terms of Bitcoin. Not really interested in shorts here. That's why I'm looking at those lower sweep levels. If we do play out this range, that would be fairly expected, especially going into October, where you can see bullish flows come in Q4. Can see an early week bounce, and Bitcoin very often rallies going into the monthly close. It's a real phenomenon which you see time and time again. And the reason for it is because it's payday. First of the month is payday for all of your retail traders. So what smart money like to do a few days before is start marking up the price on the crypto coins so that when payday comes, retail FOMO in, buy in a bad position, and then that's what otherwise known as exit liquidity. They mark the price up because they know a known buyer is coming in a couple days, and then they typically use that as exit liquidity to fill their sells. So very curious to watch in the coming days as we head into the 1st of October. Do you see smart money actually use that as exit liquidity? If so, you're going to see new lows be made. And if they don't, if we actually just start to see a sustained rally, well, that is a divergence. That means smart money are not using those obvious situations for them to sell and fill shorts or fill their hedges using their exit liquidity, which therefore is bullish. That means they're actually choosing to not sell, which leads to your bullish structure. So something I'm looking at in the coming days, do we see the classic rip into the end of the month, sell off then in the coming days and first week of October, or do we see it actually start to hold and build structure? Something to note, but until then, looking at these lows, if we do go down, because that's where the high risk to reward is going to be, and do we sweep one of these levels, that should offer a reaction, barring some big catalyst that sends Bitcoin much lower, because at the end of the day, as I said, for all the bearishness, we've gone up and we've gone down. Yeah, we still haven't made a new low for September, therefore the chart isn't as bearish as sentiment suggests. Yes, stocks are mooning, gold is mooning, and Bitcoin and crypto is massively underperforming, but it's yet to be seen whether that is weakness or whether that is lagging. And we'll get a better picture of that as we head into Q4, which should typically be a bullish month. Therefore, you should see bullish flows actually start to come in, whether it's the beginning of October or whether it's the latter end of October. That's going to be very telling for what Q4 is going to be like. And that's the levels I'm looking at. Of course, the daily 12 and 21 EMA bands, they are currently red. So we do see on Bitcoin here, we are below these bands. They are bearish, therefore getting above them, again, building that bullish structure as I mentioned, flipping these bands green. That's all going to be confluences and triggers to say, hey, maybe this was just the classic choppy September that we so often see, where you get a move down in September, then a move up. We've of course had the opposite. We've had a move up, then a move down. Or like 2023. September begins over here. This is more similar. So you get a move down, then a move up, then a move back down, but you build a higher low. Therefore, it's nothing out of the ordinary for what we've seen on Bitcoin in terms of the September price action for all the bearishness. It has just done the usual chop and mean reversion that September's offer. So that's what I'm saying. If you see a move to the September low or July low, I'll be looking for reversals and long setups. And alternatively, if we do just build a high low here, much like 2023 example, then I'm watching for the daily bands to flip green. And of course, on the weekly to get above this high for the final confirmation. And I think that then almost certainly leads to a move towards that all-time high, even if it's just to distribute and grab liquidity again. But hopefully it's Q4 and we actually get an extended rally higher, because Bitcoin rallying is what's going to lead to your next wave of altcoins rallying. At the moment, you've got the same money, the same profit sloshing around and rotating, which doesn't allow for your best conditions in altcoins. It doesn't allow for those big rallies across the wider market. Instead, you see that musical chairs. And if Bitcoin stays in the same area, there's no new profits to rotate. Therefore, you need this chart to mark up, make a new high, because that's going to trigger a bunch of profits, which can then rotate into that risk curve, into those riskier altcoins. And you can actually see a new injection of capital after Bitcoin has topped out. So something to keep in mind. Now, of course, not guaranteed. As I said, bands are red. This is a distributive structure. So wait for your triggers. Use a tactical approach to trade the rest of the cycle, because we're not early. I shared this with you guys in the morning market videos. This is the phases of a bull market. With the bear market phase, this is where your smart money is buying up the supply, buying up spot Bitcoin. Everyone's checked out. It's literally only smart money left, no retail traders at all. You then have the recovery phase. You start to get bullish rumors. However, you still see things like interest rates continuing in the sense that they were hiking. You then get the bullish phase where you get this big expansion. Now retail starts to come back because they see what's happening. Price is going up. And when number goes up, retail starts to come back and smart money start to looking at taking profits off the table. And you're now getting into the euphoria phase where we see Bitcoin Treasury Company mania. We see ETH Treasury Company mania. ETH's hit all-time high. BNB's in price discovery. There's been a lot going on. And the Bitcoin Treasury companies, they really are drying up. MicroStrategy, all of those copycats, it's not pushing Bitcoin higher no matter how many companies announce they're going to be adopting a Bitcoin Treasury strategy. The market doesn't care anymore. It's fully priced in. Same with the ETH Treasury companies, except even worse because it's a riskier asset and it's even more of a copycat. So it's the markets are already used to it. And if the markets are already used to something, then it's more priced in. The fact that the ETF rumors led to such a large rally is because no one knew what ETF rumors could mean for Bitcoin. No one knew what a Bitcoin ETF could look like, or no one knew what institutional adoption, true institutional Wall Street adoption would look like for Bitcoin. That's why you get a huge markup, because it's the what if. It's the what if. And even in the bullish phase, when you had the first pro crypto president, you're talking about the strategic Bitcoin reserve, it's the what if. What if this is huge? How do you price in something like that? It's very difficult. And when it's difficult to price an event or narrative in, that leads to price running in these absolutely ripping rallies. But now you're seeing Bitcoin treasury companies, they got priced in, and we haven't seen such a markup yet. Now, again, that could change. Potentially we reclaim 118, and we do get the classic markup from the support resistant levels on Bitcoin, and we do continue this pattern, and we're just retesting it again here for an extended retest. Sure, that could be a scenario, but at the same time, for now, it's not been as strong. The narratives haven't been as strong, and you're just seeing Bitcoin void of a catalyst, but also void of a bearish catalyst. You're seeing interest rates are getting cut. You're seeing the liquidity situation improving. I say that with air quotes because the fact that Bitcoin is actually turning at the moment, given that Bitcoin is usually the gauge, the best gauge, the fastest gauge for liquidity, potentially that could be changing, or there's something overhead, which I'll cover later. But you're in this limbo where it's void of a bullish catalyst, void of a bearish catalyst, and you're just seeing profit taking as narratives have dried up. Therefore, you just want to adopt that tactical trading approach. As I said, if levels get reclaimed, great. Trade your setups, take your swing longs after you get your confirmation. And if they don't, also great. As I said, I took profit fully on my cycle bags at 121.1k. So if we go lower, if we do have to go to those deeper targets, I've got cash ready. And if we do reclaim, I can just trade it. And that gives you so much clarity as you trade in this euphoria phase, because at the end of the day, the best gains are behind us. You got to accept that. Got to just admit that. Doesn't mean we can't have ripping rallies, especially on altcoins in those later stages. But objectively, you look at Bitcoin. Are you going to see better opportunities for your high time frame bags than 110k? I think yes. Are you going to see 100 sub 100k eventually in the coming years? I think yes. So getting to that mindset where adopting that shorter term trading approach is more favorable when you're managing the risk of your portfolio and trying to keep your gains so that you can be around in the bear market phase, buying up the cheap Bitcoin, buying up those generational returning trades, because that's what it's all about. And to make it to that phase, you have to survive this phase. So keep that in mind, manage risk, and adopt a tactical approach would be my best advice. Have a plan for either scenario and you're never going to miss out. That's what we do as traders. So that's the breakdown for BTC. When we look at Ethereum, what are we seeing? Well, we had this compression on ETH, which broke to the downside. And since then, we've lost the high time frame support resistance level. Now, could ETH reclaim this level and actually start to rally? Sure, you can definitely see bounces if we can reclaim this level to take out some shorts, especially early into October, even if it's a lower high bounce. But for ETH, what you really want to see it reclaim is firstly the high time frame support resistance level, and then really get above this high over here. Once ETH crosses this high, you can say that it can potentially break out here. But until then, anything from here could just be a breakdown from the range and retest of resistance before going lower. So keep that in mind. While a lot of traders will be getting absolutely bearish at the lows on the breakdown, you often get these squeezes, especially going into the end of the month, where they're not necessarily bullish bounces, but they squeeze shorts out and then lead to lower later on. Therefore, you want to wait for your proper structure levels to reclaim to start saying, okay, ETH could actually be bullish and target new highs. But until then, you're seeing on ETH, it has shown weakness. It broke down from the compression from this range. You're going to have a bunch of underwater longs within this range. And when you look at the weekly, which closes in a couple hours, you've actually got a very interesting close coming up, because potentially, if we can close above the high time frame SR on the weekly, then that almost saves the false breakout over here. Because if we close below it, then you close below this high, which ETH broke out from, which does confirm a false breakout. It means the bulls who tried to break price out of this level failed. Therefore, I'd be watching that weekly close very carefully on ETH. Can we close above 4,096, or do we close below it and confirm a false breakout? Closing above would definitely be a good sign on ETH. It would show that these weekly 12 and 21 bands are going to hold. You are at the level on ETH where it can still be bullish on the weekly time frame, because this is your structure level. This is your order block on ETH. It goes all the way down to the yearly open, and we've so far wicked into it. Therefore, when you go to the daily time frame again, while this time frame is showing signs of bearishness, bands have flipped red, broken down from the recent consolidation, the recent compression, broke below the high time frame SR, we have dipped into what could be support. Therefore, again, you just want to now see the daily time frame, your faster signal, start to invalidate the bearishness that it's had, and again, flip those daily bands green, get above this high. That's your confirmation to actually start to look for ETH to potentially be bullish again. But until then, your daily time frame leads into your weekly, so I would be cautious and look to trade ETH with those specific triggers. That'll save you a lot of money and save you from longing a potential downtrend if we do see continuation lower. Because again, on Bitcoin, you're right at the level where if we do close below and start accepting below this high time frame support resistance level, well, potentially you're going to see an extended downtrend to attack some of the lower liquidity. So that is the full wrap up when it comes to the markets. Quick look at gold. Gold has, of course, been all the rage. It's been all the interest in the markets since it broke out from the 90-day consolidation that I mentioned to you guys. So I told you on this breakout, gold is going to rally higher, because very simple, cause and effect. You had a 90-day consolidation. That's going to lead to an extended rally, because all of the positions that are built up in here, the accumulation that was done, that builds up energy for a mark up phase. And it was yet to be seen where profits start to be taken, and that's, of course, when the next consolidation begins. But for now, we're in the markup phase and energy is being released, and that's leading to Bitcoin, of course, having weakness. So you want to mark out your structure levels on gold. Once we see this low lost, potentially that's going to be bullish for Bitcoin, because this is the low at the moment in this structure, where if we start closing below it, then you're looking at filling in these gaps. And as you guys know, gold consolidation leads to Bitcoin uptrends. However, if you just see it keep on marking up, well, potentially this is a risk off signal, and it's going to lead to Bitcoin not remaining strong and actually continuing to underperform. When you look at stocks, it's a similar story. Stocks, they're going off to all-time high. So from here, you want to see, do stocks lose this order block over here? Do they lose 6.6K, or do they continue rallying higher? It's going to be very interesting to show how the markets are reacting, because as I said, Bitcoin's lagging, and that is not something we've seen before. So Let's dive into that in catalysts and risks. But first of all, I want to dive into positioning. So, when we look at the position on Bitcoin, we have open interest at the bottom here. So this shows the longs and futures that have built. So when open interest rises, this is a long and a short opening. And when open interest falls, this is when longs and shorts are closing on net. So in September, price dumped 7.84%. Open interest dumped 12.38%. So that's good to see. That means leverage got flushed out at a greater rate than how low price went. So always a good sign to see the futures market leverage getting flushed out on your downtrends, because the worst thing to see is during the downtrends when price is flushing, you see open interest rising and longs are longing the dip, longing the dip, longing the dip, and that leads to bigger and bigger flushes to fully wipe them out. But we hadn't seen that. We've actually seen a nice wipeout in September, which is healthy in that sense. So no surprise that we're seeing price try to rally as we head into the CME Open on Sunday. Longs have got wrecked, and no doubt shorts, those guys need to have taken profits here. If they've not taken profits, then they're at risk because the positioning is going to be favored towards longs while the open interest has been flushed in the short term. However, when we take a higher time frame look at the open interest, so we're on the daily chart now, we've got the Bitcoin open interest here and altcoin open interest here. You can see that on the higher time frame, while Bitcoin has broken down from its range, so over here, broken down again, this is the 112K level, open interest has not broken down. And that is actually a divergence. So while price is below 112K, you're at risk of longs getting flushed here and open interest getting wiped out, because you want to see open interest making lower lows and lower lows and lower lows. That means leverage is getting wiped with price flushing down, otherwise known as harmony. That's healthy. Whereas when leverage isn't getting wiped, as I said, that shows that longs are longing the dip, longing the dip, longing the dip. And longing the dip is fine. That's okay if price reclaims 112 and the structure levels above, if price reclaims the daily 12 and 21 bands and stays above 112. That then puts the pressure back on the shorts that would have built up in this open interest, and you can actually see that fuel a rally higher. But while we're below 112K, below the range breakdown level where the open interest has held, well, you have your longs under pressure, because all of the longs who have bought within this range, all of this open interest, they're all underwater. They're in the red. And if they're in the red, the longer they're in the red, the more likely there is for a flush further to wipe them out, because that's going to trigger sell pressure. People want to exit and cut their losses. So until 112K is reclaimed, which puts them guys at break even again, bears have momentum and there is risk of a flush further down, whether it's this week, whether it's in the coming weeks. So watch that 112K level as a pivot in terms of open interest and longs and short positioning. Above it, bulls are safe. Below it, bulls are not safe, to put it simply. And when it comes to altcoins, seeing a similar story where open interest is building and building, seeing higher highs and higher lows. However, that tells you one thing: if your altcoin chart is not making higher highs and higher lows, for example, Ethereum, potentially that can then lead to longs being under pressure, as longs are building higher and higher while price is going lower and lower. And it doesn't take a genius to work out what that can lead to if price doesn't start reclaiming levels. So that's something to note with positioning. You want to see price get above those key levels to put longs back on side that have built up here. Otherwise, these longs are at risk of catalyzing a further flush lower in the coming weeks. So that is the positioning wrapped up. Moving on to catalysts and risks. So economic events coming up. Friday is really the most notable day. So we have non-farm payrolls, unemployment rate, and ISM services PMI. I don't think it's going to be a big market mover. Markets don't seem to care too much about economic data. You see price goes up, price goes down, no matter what the data shows. So it's not really producing much of a reaction, but this is notable and can always catalyze a big move. Smart money like to use it, especially when you're in downtrends. An economic event can lead to a nice rally for more exit liquidity, a bounce into a lower high. And that then can provide your situation where you see support form or resistance form for the next uptrend or downtrend, whether it's a lower high or higher low. So when it comes to the Bitcoin ETF flows, this is more important than the economic events. You've actually seen outflows continue on Bitcoin in the past few days. Instead of the steady inflows, which we saw at the start of September, which led to that beautiful rally, we're now seeing outflows. And that's something to keep an eye on. If ETFs keep selling, we know they can keep selling and selling and selling because they've done it previously and it's led to some of the downtrends on Bitcoin. One thing to keep in mind is those downtrends always do lead to the best opportunity. When you continually see the outflows and outflows and outflows, those have always marked my best buys and my best longs of the cycle. So while some of the things I've said in this outlook may sound bearish, as a trader, that should also sound like opportunity, especially as a Bitcoin bull like myself. So something to keep an eye on next week. Do we continue to see outflows? How does price react in relation to that? And moving on, I want to lay out the bear case and bull case for Bitcoin. So there's a clear bear case in crypto. We're seeing potential risk off signals. You've got gold rallying. Now, gold rallies typically during times of uncertainty ahead, or a potential upcoming recession ahead, or potential geopolitical conflicts ahead. And they are typical risk off signals. Now, the caveat to that is gold also does rally when the financial system is stressed, which can be coincide with Bitcoin rallying and stocks rallying because it leads to liquidity injections into the market and monetary policy easing and fiat debasement, which we know Bitcoin loves. However, those other three things that I mentioned, the risk off signals, are the scenarios where you actually see Bitcoin down and gold up. You're also seeing the dollar rally off a nice sweep reversal from FOMC, which is a further sign of, are we seeing risk off signals in the market? You then have stocks which have had a small pullback, but overall rallying to all-time highs. And the key point is all while Bitcoin has been sideways. So Bitcoin's had a sideways September, stocks up, gold up, dollar up. So what does this mean? Is Bitcoin just lagging? Or is Bitcoin actually the leading indicator of liquidity and showing us that there are some risk off signs ahead and there are liquidity negative signs ahead? Very potentially. A lot of people are going to be going into Q4 and just assuming Q4 has to be bullish because it always has been bullish. Q4 doesn't have to be anything. Markets don't have to do what you want them to do ever. Now, is Q4 typically bullish? Yes, correct. But something to keep in mind, what we're seeing leading into October is that Bitcoin weakness, and Bitcoin tends to top out before the stocks, before these markets, as it is, as said, the leading indicator of liquidity situation. Therefore, something to urge caution, especially when you're seeing gold rising and the dollar rising in tandem. Potentially, there's something in the coming months that we're going to see as the big risk-off sign. And of course, by the time you see the big risk-off signal, whether it's a recession in 2026, whether it's more war outbreaks, that's when the market bottoms. Therefore, you have to talk about it now. You have to lay out the bear case beforehand, as the markets will price these things in. So that's the bear case when it comes to Bitcoin. Now, when it comes to the bull case, you have Q4 flows. As I said, you look at the Bitcoin quarterly returns, on average, they are 85.42% positive. So, strongest quarter. You look at the Bitcoin October returns, only 2 months were they red, and they were both bear market years. So, in every bull market year, if we're going off the 4-year cycle, October has finished green. So, typically, October on Bitcoin should finish green this month. And that's going to be very telling on Bitcoin as to whether it does finish green or if it doesn't finish green, to whether Q4 is going to be bullish. When you have the start of a new quarter and the previous quarter is ending, you have a phenomenon, especially leading into Q4, where you have structural flows. You have pension funds, hedge funds, they all have to reallocate into the new quarter, irrelevant of what price is doing, because it's part of their structured plan which they've laid out. They don't care about price as much as we do as traders, because they're not trading short term. Their job is to allocate cash to get a return over time. Therefore, what you tend to see is the start of Q4, end of Q3, very bullish flows, especially into the stock market, into mutual funds, into bonds, and all of those TradFi assets that funds like pensions love to utilize. And you have this scenario where that should also start to flow into Bitcoin. Now that you have Bitcoin ETFs, you have Bitcoin becoming institutionalized, you have Bitcoin and crypto, Trump's pushing for them to be available in 401ks as an option. So while yes, it is very immature at the moment, and that could be why we've actually seen Bitcoin lagging lately, which is the actual bull case, which is the fact that Bitcoin is just an immature asset. Therefore, that's why you've seen stocks rallying to all-time high, gold rallying to all-time high, because they're established. They have had ETFs for decades and decades. They are institutionalized. Therefore, you see those Q4 bullish flows going into those known mature assets, whereas Bitcoin, not so mature, therefore hasn't received those flows, and perhaps that's why it's lagged and it's going to now catch up. That's a potential bull case. And of course, if we do see stocks absolutely rip in Q4 as they often do, well, in that scenario, it's hard to see Bitcoin also not having favorable returns. So the bull case is that Bitcoin is lagging and it's just immature in the sense that it's not yet seeing all those Q4 inflows. But once that's over, you should then start to see things correct again, Bitcoin to take precedence at some point in Q4. Because Q4, as you head into those months, typically should be a bullish month based on historical returns. So that's the bull case, that's the bear case. Remember, both sides, both cases, they can definitely play out. There's a point for both of them. You have to prepare for all scenarios. That's why it's important as a trader to not have a bias and just ultimately marry that bias, because every terrible story in the markets, every big loss comes from someone marrying their bias and ignoring the signals, ignoring their systems, ignoring risk management because of the bias. Therefore, as a professional, you lay out a plan for both cases and you see which one starts to play out. Because it's your systems at the end of the day that enter you long or short, define your risk, define your position size. Therefore, these are just theses to give you further confluence. So that's the bear and bull case. moving on to trade of the week. So here is the trade of the week for Bitcoin. I'm looking at a sweep of the September low. If we can sweep that level, then that can set up a potential long on a sweep reversal, or the July low, same setup. If we can sweep that level, that sets up a potential long on a reversal. Again, looking for those high risk to reward reversal patterns that have been going on about in morning markets. Now, could you look for shorts on Bitcoin? Sure, but I'm not that interested in shorts. As you guys know, I was already short last week in morning markets, which looks like is going to be fully closed now with a H1 close above that 110K level, just to give you guys a quick update on that. Therefore, I'm not all that interested in playing further shorts from here because the big down move has already happened. Dumb money, no doubt. I've been getting short at the lows here and can easily get wrecked even if bearish. And they're the setups where I say it's probably not best to look for shorts. The best shorts were, of course, in the bearish reaction to FOMC. Now you're getting later and later. There's more people getting bearish, therefore less edge. So that's why the plans I've laid out are both long ideas, which may not come to fruition next week. It may be in the coming weeks. However, if I was going to take a setup, these would be the highly probable ones that I like the look of. And again, it's waiting for a sweep and a confirmation of a reversal, not just blindly long in the lows. Wait for the sweep, reclaim, and break above the interim high there, and that sets up longs, at least for a bounce towards some of these structure levels between 112 to 118K. And same, of course, from the July low. Not just blindly long in it, would wait for a sweep, reclaim, and break of structure to then look for longs. Because of course we could still downtrend, but if we're not going to downtrend, those are the setups that I would be interested in that I think can offer high risk to reward. So again, not interested in shorts because the best short has already played out in September. More likely to go into chop, even if bearish, and don't want to be giving you guys any low probability, low risk reward setups for trade of the week. Just no point. Might as well save those bullets, especially if Q4 is going to be what it always has been, and that is the best time to trade. And looking back at all of my journals, the most profitable period to trade. So definitely time to lock in. Get your charts ready. Make sure you're watching morning markets every day. I upload a video Monday to Friday. On Saturdays, I do altcoin analysis, and Sundays, weekly markets. And we will have a monthly outlook for October in the coming days too for a super macro high time frame analysis of the markets. So guys, if you like this video, let me know in the comments. Drop a like. That tells me this content is useful. Hit that subscribe button. Help me hit 100 subscribers so I can push this content and help more traders out in the space. Hope you guys enjoyed. GM.